Welcome to Options Pairs Tools Videos, Part 3, The Pair Searcher. I'm John Broussard. This is a copyrighted video and it's educational. We've been going through how to use the Options Analysis website to help you with pairs trading. We're now going to look at the Pairs Trade Searcher. In the last video, we were in Pairs Finder. We discovered that we like the two stock pairs VIG and Diamond. We have two options to go into our pair searcher. We have the 1.5 Trader and the 1.5 Searcher. The 1.5 Trader is if you would like to do most of the work in finding the pairs trade yourself. The 1.5 Searcher is we're going to let the software do most of the work. I recommend that you click on the 1.5 Searcher, which are all the links under the 1.5 Searcher column seen here. We're going to click on that 0.953. When we do that, the 1.5 Spread Searcher web page will pop up and load. Behind the scenes, a lot of things are going on. It discovers what the cash spread formula is and what the multiplier is, which is 2 in this case. Computes the correlations, decides which is the higher price stock and which is the lower price stock, looks at their cash spread history, looks at the recommended pairs trades that are given to us from Random Walk and decides which of the 4 possibilities between puts and calls, long and short spreads we should use. In this case, short VIG and long Diamond puts. Looks at the available expirations of options and picks the shortest one. The shortest one is not the one you're interested in. You would click on one of the other dates shown within the time period analyzed. Once it's made all those decisions, it brings up the spreadsheet table. The spreadsheet table is a table constructed inside the Random Walk books. You use the cash alignment formula to decide which strike in the lower priced symbol should be aligned to the strike in the higher price symbol. And we start with the strikes that are closest to the current close. 74 is close to 73.8 and 162 is close to 161.66. And we align those two strikes. And now we're going to look for spread combinations between the 74 strike and the 162 strike. We likewise look for spread combinations between the 75 strike and the 164 strike, and so on and so forth. The software makes all these combinations together and then looks and sees what will be the profits if both stocks go up and what will be the profits if both stocks go down. If the option pairs is neutral, that is, we have an equal number of spread between one option trade and the other, we will likely see that the bearish pair profits and bullish pair profits are equal. So for example, we have a 4 spread in the 164-160 strikes, and we have a 1 spread in the 75-74 put strikes. So 4 of these options will equal to 1 of these options in overall spread. That's what keeps these two profit possibilities equal. When it's unbalanced, and we don't have any unbalanced ones in this particular case, these two numbers will not be the same. The ranking is based on the how much profit we can make over the worst case loss. And the worst case loss is shown here. That happens if absolutely everything goes against you and both option trades end up at their max loss value. Very unlikely when the two symbols are as highly correlated as these two symbols are. We've discovered that, though, this forms a very nice correlation. And in fact, you can see here, since we're in the past, the website actually computes what happened when the trades reach expiration date. And it can happen that you can end up making more money than these two columns indicate if things really move in your favor. This particular tool has the ability to not use balanced combinations of option contracts. It can use unbalanced versions, and that's done by, for example, clicking bullish or clicking bearish and letting the website go off. And notice how now there's more bearish profits than bullish profits, and it's done that by mixing the two contracts together. Note that this trade ended up turning out very well. But for now, we're only going to be looking at balanced neutral option pairs. We're now going to, in the next presentation, open up the option pair and go into the pair's risk graph.